Cracker Barrel reporting slightly higher sales in its fiscal third quarter and boosting its full-year adjusted EBITDA forecast. The restaurant chain expecting a $5 million hit due to tariffs in the fourth quarter. Shares are up over 3% at the moment. Joining us now, Felss Masino, Cracker Barrel Old Country Store President and CEO. Also, Yahoo Finance's Brooke DiPalma, who brought us the conversation. Julie, I want to start with you, of course. Thank you for joining us. Give us some insight into the impact of tariffs on the business. You obviously cited that $5 million hit. Just walk me through how you're thinking about the impact of tariffs as the policy continues to change.
Sure. Thanks for having us here. Look, I'm really proud of the way the teams have been dealing with the tariff situation. It's not new. It's been a topic since the campaign trail. So we've been working on this, thinking about our sourcing strategy, our SKU strategy, even the flow of goods. So the teams have done a great job on that. And we were really pleased that the impact to this year, we've been able to mitigate that down to $5 million and absorb that into our guidance and still be able to raise our guidance on the year.
Julie, I want to talk about vice versa, the impact that it's having on consumer demand. Your business is 80% food, 20% retail. Many people probably don't even know that. You did see a slight decline in same-store sales growth when it comes to retail. Are consumers just grabbing less out the door because of this uncertainty?
Look, the macros are really interesting right now. They're a little volatile. There's some good news, but a lot of the fundamentals of the economy are actually quite stable. We're seeing food away from home be consistent. It's a consistent measure over the last, probably 40 years that it's about 5%. Our job is to really make sure that people choose us when they're out. Everything that we have in that retail store is discretionary. It's wonderful. It's joyous. It's a treasure hunt. We're seeing people still choose us and shop with us, and we're making sure that we're delivering that great country hospitality and value every day for them on these items.
But maybe are they just grabbing less? Are they worried about their budgets right now and perhaps opting for the food, that essential, maybe not the discretionary?
We're seeing traffic up for us the last couple of months, and the choices that they're making are not suggesting that they're managing their mix. We reported, again, a very strong mix component on the restaurant side. And given everything that's going on, we're really happy with where the retail business is performing. So we're not seeing people really manage check at Cracker Barrel, but maybe that's because we are such a great value. We offer abundant portions of our delicious scratch-made food every single day at a great value. And don't forget, we have a loyalty program where guests can earn and redeem on both sides of the business. So we think that they find tremendous value in that. So we're pleased with how we're showing up. We think we're well positioned given the macros.
Can you talk about what you're seeing in terms of a little bit more specifics on consumer behavior? Have you seen them switching menu items? Have you seen any change in what they're buying in that storefront as well? Just talk to me a little bit more about whether you're seeing any signs of a change in that consumer purchasing power.
Really, we aren't. As we discussed yesterday on the call, our guests are pretty consistent across age and demographic barriers and kind of sizing this past quarter. So we haven't seen any shifts between over and under income levels or even age groups. What we are seeing is continued mixed growth, actually. So people are choosing items like our new campfire meals. They're choosing items like our hash brown casserole shepherd's pie. So we're actually getting a little bit of benefit from check. Which is interesting, and a lot of times you worry in situations like this that people might manage check or, to your point, choose less often to go out or to shop, but we're actually really not seeing that. Again, we think it's because we offer such abundant value at Cracker Barrel. Our price points are quite sharp too, Brooke. I don't know if you're aware, our average check is like $15, while the casual dining industry is $27. So we're very affordable for the abundance of the quality food that you get.
I do want to point out, Deloitte actually put out this new report in late May that says that more travelers are expected to take road trips this summer. You guys are a roadside chain. How does that bode for the business?
Yeah, we are optimistic about our summer. It's off to a great start. As we shared yesterday on our Q3 call, Q4 is off to an awesome start. We literally brought back a fan favorite, the campfire meals that guests and employees have been asking us to bring back for several years. We updated the flavor profiles, made them a little bit more flavorful, a little bit more helpful. They're incredibly abundant, and we added a value price point in the innovation of those meals. So there's now a shrimp and andouille sausage skillet that starts at $10.99. So we're here to welcome all guests this summer, whether they're up and down the highways or however they're coming in to see us, we're here to serve them and take care of them with our great food and country hospitality.
Julie, in a note from John Tower, he said that traffic growth was one of the concerns among Wall Street there. Is value and an increase in road car travel, will that bring in more traffic? Will that address this key concern among the street right now?
Yeah, look, I think that really stems from our Q3. Q3 was rocky. We're in the middle of a 3-year transformation. And as we've shared with the street and all of our investors, it's not going to be a straight line. We've got a lot of things that we're working on. I'm really proud of how the team's executing every day to both deliver the business today while we transform for the future. Q3, many people have already forgotten, but February, the weather was really bad and the macros were not great. So while February really was not strong for us, March, April, and May have seen sequential traffic improvements. We shared that on the call. So we believe the underlying health is going in the right direction for the business. Really, February kind of caught us there a little bit, but I'm really proud of how we actually strapped down and actually delivered the quarter, and we're able to actually keep EBITDA up and raise our guidance on the full fiscal year while protecting Q4. Because to your point, Brooke, we're ready for the travelers. We're ready to welcome everybody in. We started that, kind of this past weekend with the Cracker Barrel 400 as a great kickoff with our campfire meals to the summer, really welcoming people in. So we're ready for everybody.
Julie, we continue to hear from our sources across Wall Street concerns about any potential headwinds from the economy turning into a potential recession in the second half of this year. How are you positioned to withstand a recession, and what might that look like for your business?
Yeah, we think we're very well positioned. In times of recession, value-oriented businesses tend to do quite well. As I mentioned before, our average check is $15. So you get an abundant, really delicious home-cooked meal for $15, which our competitors are way up at $27. So we think we are very well positioned. And remember, we also have loyalty. We have a $7.99 pancake special that's available all day, every day. We have early dinner dine that starts at $8.99.
Right.
We're not seeing a pullback in those spaces.
Yeah, and I do just want to point out something else that came up on the earnings call here, a question about any optimization on the labor side of things, potentially cutting back on costs by optimizing back of house. How do you see labor evolving going forward? Do you plan on cutting back on any jobs?
Quite the opposite. I would say we're always hiring at Cracker Barrel. If you've got a smile and you want to deliver some great country hospitality, we're here. We're ready to invest in you. And I think that's evidenced by the fact that our turnover number was actually up 14 percentage points Q3 year over year. So we are optimizing how we use labor. And I talked a lot on the call about the back of house optimization. A lot of the jobs at Cracker Barrel haven't evolved over the decades. And this project is really about improving the quality of food while making those back of house jobs easier to do and cooking more in real time to when the guest is in the restaurant. So that's what that phase is about. And there is cost savings associated with that, which we're seeing flow through the P&L.
All right, Julie, thank you so much for joining us. And thank you to our very own Brooke DiPalma for bringing us the conversation. Appreciate you both.
Thanks, ladies.